Hello, everyone. I'm Angelo Robles, host of the Angelo Robles Podcast. I'm also the founder and CEO at Family Office Association. We're really excited about today's conversation and podcast. And to give a little bit of context to where we're coming from in my questions, I'll tell you a little bit about who I am and what we do. I help global families and their family offices solve problems, procure positive future outcomes, and prepare for intergenerational necessity. It's vital for families and their family offices to understand their vulnerabilities and become more resilient so they can mitigate risk and prevail during times of crisis. My experience with some of the wealthiest families in the world has allowed me to distill best practices for discovering purpose and refining vision, governance, structures, systems, processes, and culture that successful families and their safeguard family offices need in order to thrive. Today's podcast is titled The Great Decoupling: What's Next for China, the US, and the Global Economy. Our special guest today is Diana Choyleva. She is the founder and chief economist at Enodo Economics. Deanna, welcome to the show.
Thank you very much. It's a pleasure to be here, and top marks, not only on pronouncing my surname correctly, but also on pronouncing Enodo correctly. Believe it or not, about 50% of people say Endo, and I'm really tempted to ask our branding people for a refund.
Well, this is a rarity, whether it's my live listeners or my podcast people. They're like, Angelo may have a great radio voice, but he's not always great at pronouncing names and company names. But this was a little bit of a tough one, and I'm pretty proud of myself. I nailed it. So I'm really, really excited. To give people a little bit of context, we're doing this live and recording it in October. So obviously the US elections are right around the corner. We're in the midst of COVID, the challenges with the US and China. So there's just lots going on now. It's important to note that time frame because maybe some of you may watch or listen to this a year or 10 years from now. I don't know, but I think it will be interesting to hear live at the moment some of the thoughts from someone as globally acclaimed as Deanna. We're very excited to have her on. These are subjects that certainly we're incredibly interested in. I actually wish we had more time. So there may be some things I'll have to leave a little bit, quote unquote, on the table. What we're going to do a little differently, because I think it will be great to hear Deanna uninterrupted for 10 or 15 minutes, give an overview from her perspective. And then I have a fair number of questions. And from our live audience via Zoom, we'll have a chance for you to send in a chat feature question. Again, please be muted and no video. And 99% sure we'll be able to get to those questions and keep it within the time frame that we have. So Deanna, on that note, I would love to sit back and listen to an overview from you and then jump into questions from there.
Thank you very much. So I will try and stick to 10, 15 minutes. I'll keep an eye on the watch here to my left, but also please do so yourself. And if you notice I'm straying, interrupt me with your first questions. The topic is enormous, not least because I will argue to you that the Great Decoupling, it's a term we came up with about 3 years ago, and I was so adamant to get the PR right as well that we even bought the website, thegreatdecoupling.com, to stake our claim on it. It is by far the most fundamental driving force for the global political, economic order, and of course, financial markets. So it's, as you can imagine, wide. And what I will try and do is focus on the key ideas and then leave a lot of the detail to get into as we discuss and as we get the questions from those currently on the podcast and your own questions. Now, before I begin, I will just tell you something that you might find interesting about myself, because you so beautifully pronounce my name. I do come from Bulgaria, and I grew up in my former system that was communist. And I think in general that's important to note, because Enodo's clients have always come back to us and told us, look, we think you understand China in a way that's innate because you grew up in communism, and having trained with some of the best Western economists, you also know how market economics works. So you are able to essentially understand how they interact in China in a way that very few people can, because you don't necessarily have those qualities in someone who is also importantly not Chinese and is not constrained by feelings of national pride, or indeed sort of the long tentacles of the Chinese Communist Party, which does exert a fair amount of pressure. So all that I'm going to share with you today is entirely independent, unbiased research. And I've been doing it for 2 decades. But as a child, I actually wanted to be a detective. And in those days in communism, sort of reading books was a difficult thing, and crime books were a neutral ground. So I read a lot of them, and I thought, oh, this is very intriguing. I want to become a detective. In the end, I became an economist, because by the time actually I came on to starting university, the Berlin Wall had fallen and the opportunities were endless. And what I want to say is that being an economist is very much like being a detective. You're trying to collect as many pieces of raw information, and then you're trying to put them into the same coherent picture. And the more pieces that you manage to fit, the more confident you get that you have the right story. And with respect to the Great Decoupling, my level of confidence and credibility is extremely high. So I'm inviting you all now to kind of jump on a ship to the moon with me and look at the Earth through a telescope and try and figure out what is going to be the key driving force in the world. And the Great Decoupling, what this is really an all-encompassing geopolitical confrontation between the existing superpower, America, and the aspiring superpower, China. And it's tectonic shifts in the global political and economic order, which are likely to lead to a bifurcated world. A world where there is an American sphere of influence and a Chinese sphere of influence, and those two interact very little with each other. Certainly, the rules of engagement will be entirely rewritten. Now, why I say bifurcation and not, let's say, balkanization? Why is the world not going to split and become multipolar, for example? The reason is technology. Whoever wins the technology race will be the global leader. Both America and China are acutely aware of this. But actually, both America and China are in a unique position. The two economies are so far ahead than anyone else in terms of technology development that no one else can really catch up with them. And the interesting point as well to make is that if we were talking 30 years ago, before we live now in the Internet of Things, and with the arrival of 5G, and then when it comes 6G, 7G, and so on, we live in such an interconnected world that everything can be used as a weapon. Every part of the economy, every part of the economic structure can be used as a weapon. So if I had asked you guys the question, during the Cold War, will America have been buying the bulk of its military equipment from the Soviet Union? The answer would have been, I'm sure, 99% no. Now, things like stopping someone's electrical grid network or stealing huge amount of medical records. These could be part of the hybrid war of the future. And as such, technology is also leading to this bifurcation. There is no other country that can offer a different alternative to be another pole. And at the moment, both other countries and the large multinationals are trying to play both sides, China and the US, off each other. They're trying to have their cake and eat it, but they won't be able to do that for long. If you'd like, the whole contest around whether to use Huawei as a provider of 5G network services or not is one way of assessing which part of the world will fall in which sphere of influence. And we've seen even here, I'm based in London at the moment, even here the UK tried to play it both ways. It came up first with the decision that it was going to use Huawei internally just for non-core infrastructure and not for core. And then the US put additional pressure, and more recently the UK came out and said, no, Huawei will be totally out of our systems. So this is already unfolding. And that's where we are coming into the bifurcation. Now, it's also important to realize that this great decoupling didn't start with the election of Donald Trump. It started with the arrival of Xi Jinping to power in China. And bear in mind, of course, China is not a democracy. He was not elected, but he was chosen as kind of the compromise candidate. And initially, no one expected that he will be so effective at accumulating political power and establishing himself currently as the strongest Chinese leader since Chairman Mao, certainly during China's communist period. And China just celebrated 70 years of, actually the Chinese Communist Party is going to celebrate next July, 100 years of its founding. And we just celebrated 70 years of the founding of the People's Republic of China. So Mao, Xi has become extremely powerful, and he has turned China's both economic and geopolitical policy 180 degrees to what it used to be during Deng Xiaoping. And during the era when America offered to China the policy of engagement, which at its apex was allowing China to join the World Trade Organization in 2001 as under the status of a developing country. And that was done at the time on the wave of optimism. The Berlin Wall had fallen. If you remember, we had the end of history. You know, the capitalist model had succeeded. And since then, we've had two events. One was the global financial crisis that have really shaken, on the one side, Westerners' belief in the free liberal markets, and on the other side have convinced Chinese policymakers that their model is actually better. I will tell you in a second why all of this is actually not right. But then we had COVID, a more recent development, which, again, on the face of it, it looks like that China got its economy to recover in an incredibly short period of time. America, meanwhile, is struggling. And again, you're having this conclusion in China that America is on a path of decline, and that kind of self-confirmation that they're on the path of ascendance. And it's actually predetermined by history, that's how they would think about it, that they would become the global dominant power. Xi Jinping stated that openly. Up until that point, China had this policy known as hide and bite. Keep your head low, don't sort of show your strength, build up your strength and do it quietly. And a lot of the time, America bought that. being asleep at the wheel for too long, not to distinguish between what China was saying, what it was doing, or even listening to what they were saying. But all of that changed in a way, maybe with Xi Jinping, but also with the policy known as Made in China 2025, which was all about China moving towards a position where it's self-sufficient. So I'm bringing this up because China itself has always been on a path of wanting to be decoupled from the rest of the world. They might give the message that they are for globalization, but only for globalization as long as it suits them and as long as it is on their terms and conditions. Whereas from America's perspective, they welcome China on the expectation that China will converge to become a fully fledged market economy, and surely, and politicians, that as incomes per capita grow in China, that eventually they will converge as well on the free, liberal, democratic political system. Well, we first of all haven't even had the convergence on the economics. China has not become a fully fledged market economy, let alone the politics. And Xi Jinping again said, no, we're not going to do it your way. We're going to do it our way. And so it's only, I think, understandable and forecastable that America will turn and say, well, in this case, we need to renegotiate. That was not part of the plan. Of course, the election of Trump by itself, in some ways, was a reaction of the inability of the global economy to incorporate this bolting on of this ginormous economy, China, which remained largely command-driven. It made a lot of progress in introducing market forces in various parts of its economy, but it didn't go the whole way, in particular with respect to the price of capital and the price of also electricity. And it kept its capital account closed and its exchange rate managed. So some people in the past used to refer to the Sino-US relationship as a marriage of convenience. It was never a marriage of convenience. America offered engagement and China moved in uninvited against continuous protestations from Washington, in the sense that they were not liberalizing capital movement, they were not liberalizing the setting of the domestic interest rate or exchange rate. So all of this escalated into causing the global financial crisis. And again, I'm speaking, having written in 2006 a book called The Bill from the China Shop, in which my colleague and I were arguing that the financial crisis was coming because essentially the world had become extremely imbalanced, but not because America was willing to borrow and spend and be profligate, but because China was willing to, for its own command economy related reasons, be willing to save and first invest these excess savings domestically and creating a lot of excess capacity, lowering prices everywhere else. But then it ran into its own shortages and started investing in US assets, bringing interest rates down. You remember the famous low bond yields conundrum? It wasn't a conundrum because the Chinese were investing with little regard for return, and that then caused the borrowing and spending in the US. And once the US borrowing and spending ability of households got exhausted, it kicked off the unwinding, of course, lax regulation and banks' behavior in some shape or form were also contributing to what we got and to the complexity of the investment space and the lack of understanding of some of these products. And that added to the global financial crisis. But fundamentally, the global financial crisis was actually an expression of the inability of those two systems, a free liberal market system, to be amalgamated and integrated with a large command economy system that was not moving towards becoming a market one, certainly not fast enough. And then, if you'd like, actually, I did get one thing wrong in the wake of the financial crisis because I haven't gotten that right. And the quantitative easing and what that would mean for markets, I did say at that time that we'll see trade protectionism. And I entirely based my forecast at the time on the economics, because the economics of why the two systems cannot coexist in the current set of relations has not changed. It's a bit modified, but it really hasn't changed up until now. In hindsight, what I was wrong about was that there wasn't the critical political mass to institute what fundamentally will be a total rewrite and total change in the global investment and economic landscape. And what I would argue now, and what I was arguing 3 years ago when we started with the thesis of the Great Decoupling, was that we now had the critical mass of political change necessary to really rewrite the rules of engagement completely. It actually started with Brexit here in the UK. It then continued with the election of Trump, but it was also, as I mentioned, reflected in the earlier ascent of Xi Jinping at the helm of China. And looking at where we are now, the US election is coming up. And in a second, I'm going to stop, as I think I am kind of going close to my 15 minutes. But we have the US election coming up. We actually have a very important political event in China as well, which is happening between 26th, 29th of October, which is their annual party plenum. And this party plenum, which is going to happen next week, will be the one that will set the next 5-year plan. So this is a big one, and it will give us an insight as to how the position of power is changing or not changing, but also what are China's economic technology goals for the next 5-year plan. As you know, in a communist economy, you always have a 5-year plan, and that's how they work in terms of those cycles. And that's coinciding with what is likely to be, very shortly after, probably the messiest US election ever. An election that is highly likely to be contested with a lot of uncertainty. And what I want to point out here as certainty is that irrespective of whether it is going to be Trump or Biden, US attitudes towards China have fundamentally changed. And the difference would be in the sense that someone like Biden will be willing to build a better coalition among like-minded democracies to withstand China's assault is probably not the right word, but challenge, address this challenge, whereas someone like Trump with his America's first and America only type of strategy will continue to alienate America's traditional allies. Again, very top-down consideration, but because of technology, it is extremely important that the free liberal world acts together as a counter to China, because as you all know, machine learning is really a function of the amount of data and your computer power, as well as, I guess, sort of the ability of transforming the data into having quality data rather than, rubbish in, rubbish out. And when it comes to that, the fact that China is 1.3 billion people, and with its sphere of influence will be way more, America by itself will need scale to be able to continue to have the technological advances and continue to be able to compete with China effectively. So ideally, we will have America working together with the other, in particular, the European Union, because that's a large market with a lot of people, and that would be beneficial. But before I stop completely, I will just throw at you what this means for you as investors, and in particular as the owners of assets, because there is really a contradiction, or if you'd like, a confrontation here between the portfolio managers and the owners of assets. China, in this context of the Great Decoupling, for the first time is throwing the doors of its financial sector open for a variety of reasons that are self-serving to China, not because they all of a sudden want to integrate. It's exactly the same way as they have done with the industrial development that they've gone through. Welcoming foreign know-how, welcoming foreign money, especially now when China has a big bad debt problem that they would be very happy if foreign funds were helping the cleanup. But at the same time, they need to professionalize their capital markets. This is an area where they have lagged behind tremendously. But once they do that, don't expect that all of a sudden China is really a true believer in globalization. But from the perspective of the fund managers, especially as now Chinese assets are into the global benchmarks, they have to consider China, and they have to take a stance on in a way that they weren't required before. Before, they can just ignore China if they so wish. They didn't have to give a reasoning to you guys as to why they're underweight, overweight, or whatever position they've taken. And fund managers, often even the ones, and our client base is entirely either fund managers or family offices and the owners of assets. We work not so much with the corporate sector, although we do have some corporate clients, but typically I'm used to working with guys like you. And on the fund management side, yes, even the ones that say they have the longest term horizon, well, if quarter in, quarter out, your results are not good, it's very, very hard even to maintain that longer term position. And in China, you have to understand that the equity market has very little to do with how the economy is performing. And to an extent, the state has a lot of levers to pull that are not traditional in any other markets. And create a picture that, if all of a sudden Chinese equities are performing very well, as we are currently having, I mean, it's a golden period for China right now. In fact, COVID looked like it could be their Chernobyl, but they've managed to turn it around and snatch victory from the jaws of defeat. And it's giving them a second wind in putting in place this strategy of attracting foreign capital inflows. And it becomes harder for fund managers to not be swept away or will be in coming months. It's important to consider, because for the owner of asset, you have to realize that in this bifurcated world, you have to decide not only where you might be earning a higher return. I call it the Alibaba versus Amazon problem. If both were equally valued at the moment, well, maybe you invest in Alibaba. It's a near monopoly, it's huge support from the state, and very different or lack of data privacy issues. Whereas on Amazon, already problems in terms of anti-competition, also as well data privacy. But in 5 years' time, maybe Alibaba outperforms. But question number one, in a socialist economy, are the owners of capital going to be not the last ones in the queue? They most likely will be the last ones in the queue. But even if you get the return on your investment, will you be able to spend it in the area of influence that you want to? Or will you have to spend it in the sphere of influence where you invested it in? In other words, think carefully about how the freedom of capital movement is likely to change in the next 5 years. So this was a lot of big thinking, top-down points that I brought to the table. I will hand over for us to dig in deeper.
Wow, Deanna, that was great. That was very encompassing in 20 minutes or so, and it does bring up a lot of questions. And I promise we'll get to global finances for the ultra affluent, investing in private companies, gold, even cryptocurrencies. So we have a lot to cover, but let's stay a little bit on the theme of the Great Decoupling in China and the US. And yes, I would say it became relatively obvious probably 4 to 5 years ago of China's greater quote unquote ambitions, and they're showing that side of the aggression side a little bit more. If I could take a little different perspective on the COVID, and yes, in a communist society with more control over its citizens, the lockdowns and all that are going to be far more effective. That being said, and right or wrong from a political perspective, there has been for sure, at least in the US, but to some degree around the world, a little bit of global backlash relative to COVID in China. And now you have countries like the US are realizing that probably too much of our supply chain was there to begin with. And we've been talking about that for decades, but now they're finally it's sad it happens to come from this perspective, but there appears to be, we need to bring more manufacturing back, be more active in robotics and manufacturing. And we have to look at other partners like India, who could be a great challenger to China, maybe not in the foreseeable future of the next 3 to 5 years, but looking a little longer out, and does not have a great relationship at all with China. That's the world's largest democracy. And our relationship with Mexico, where it has a lesser manufacturing cost, and we have a good relationship. It could be better, but it's a good relationship with Mexico. Let's take the other perspective of the US. We bring supply chain back. We are dominant in venture capital and startup, although certainly China's catching up to us on that. But for now, and our immigration policy may impact that in a negative way, I get that. But there could be benefit to all we have here in the US. You also have the one-child policy in China, an aging population. For a developed country in the US, we're not so bad relative to age, but again, the immigration policies may impact that. In other words, what I'm basically trying to say is, actually, could COVID and what has evolved from that be very much a negative to China's growth globally, and a benefit to the US? I know that's a little different perspective than what you said, but if you could look at it from the perspective that I'm asking, I'd love to hear your answer.
No, absolutely. And let me make myself clear, because I was not taking a stand on COVID has been beneficial in showing that China's model is better. No, not at all. COVID has actually led to the acceleration of this great decoupling on the side of the Chinese, because they wrongly, but nevertheless have again concluded that in the global financial crisis, again, they wrongly concluded that their system was better, what I explained to you earlier. And they are continuing to power ahead in that direction, i.e. in the direction of divergence. On the side of America and the rest of the world, you're absolutely correct. This has shown, because obviously they bungled the initial outbreak of COVID. We wouldn't have gotten, maybe we could have gotten to a global pandemic situation, but it would have been a different story if they were a lot more open at the start, in particular with the information they were providing to the World Health Organization. And also with the very bad mask diplomacy. If you look at surveys of public opinion on China, outside of China, they have deteriorated across the board. Sadly, some countries actually view Xi in better light than Trump, but of course Trump is not America in its entirety and may not be America in a few weeks' time. But yes, absolutely, COVID is putting this deeper wedge between the two, and both sides have concluded that let's get this done faster. So that is my view. Also, I think it's important to realize that both sides, both spheres of influence are big enough. And in America's sphere of influence, I'll definitely put Latin America, in particular Mexico. India initially looked like it wasn't taking a side, but more recently, given China pushing the envelope on their border issues, as well as the sort of behind the scenes discussions that are going on between India and the US, India seems to be staking its claim much more on the US sphere of influence. We'll see. That's not 100% clear at the moment, but they won't be able to play both sides, as I keep saying, for very long. And both spheres of influence are big enough to survive and exist on their own, if you see what I mean, to have their own economies. Globally, this will be an increase in efficiency, and costs will go up because you have to replicate everything in both. But they're big enough to do it. And without taking a qualitative assessment into whether one system is better than the other, again, we can discuss that separately. I have views on that. But what the problem is here is that will this be able to be done peacefully? That is the main issue. Because if it's done peacefully and we manage to somehow do this kind of split, we can move in a more benign global scenario. If, however, the confrontation between the US and China, there are some views out there that it will be inevitable that there will be a military confrontation between the two. Of course, both are nuclear powers, so this is not something to think about lightly, but it is very much a key consideration. And I would, we've been asked actually by a bunch of our clients to set up a separate service on monitoring Taiwan and monitoring in particular, will there be a military invasion of Taiwan? More precisely, as I think it's 100% certain that there will be, but what is the timing? And when does that happen? And will the US come and back Taiwan or not? And how will all that unfold? So there are really very serious dangers here from a geopolitical contest point of view. Even if we put aside which economic system will prevail in the long term, which as well we can discuss.
Yes, I mean, it's maybe more of a comment than a question. For sure, President Trump has alienated even potential great relationships of ours around the world. But I think many Americans, even those that may disagree with, again, how he goes about doing things, which again, I think there's many things wrong with, but the fact that he looked at agreements that we had and said, hey, these are unfair. It's to one side, not the other. I don't care. I'm going to rip them up. We're going to form new ones, and we're going to align with those. And I think there was something to be said for that. It was very unfair relative to the trade balance with China. And he pretty quickly and swiftly corrected that. Could he involve some of President Obama's more a softer approach, a more bringing in strategic partners? But they're very different people. Now, yes, it's likely if you go by the polls, we'll head in a different direction with President Biden. And I would wonder, maybe showing my concern a little bit. And again, I think President Trump has many negatives, unfortunately, but there are some things I think he's rather great at. I would have some concern. I guess what I'm trying to ask is Biden going to be the right person and tough enough to negotiate with people like China and those around the world? As an American who skews to being somewhat more on the libertarian side, I would say that I have some grave concerns about that.
You're absolutely right that Trump, by the virtue of the fact that he's so politically incorrect, threw open the issue of China. And he said it's game for all. Anyone who is against China and has a gripe with China, go for it, even if it's the national security complex or whoever else. And he's been very effective at bringing the issue to the forefront and, if you'd like, unleashing what was a building discontent within American policy circles. That had happened even before he came. There was this discontent building, but somehow no one could speak about it or could be as open. And Trump, by being Trump, managed to make it that even a more, let's say, harder voice on China sounded moderate. And that has been a massive reset. So I kind of get what you're saying from the perspective that would it have been as effective if, let's say, at the time Hillary Clinton had won the election? Certainly, she would have also pushed harder on China, but would it have been so effective? I don't know. I mean, we can't check the counterfactual. So let's not take it away from Trump that for all his faults, especially when you're a woman, you kind of find it very hard to warm up to the guy. He has, no doubt, put this US-China relationship on the map and saying this is not working for us. It has to be, we have to rewrite the rules of engagement. And what's interesting is that what I would argue is that the last year and a half in particular, is the national security complex, or as a kind of a general term of all those guys that have been in the driving seat, pushing US-China policy and using in some ways Trump as a kind of ready vessel to approve at the right time on the right, put his signatures on the right documents. And what is clear as well in the last few months is that the national security complex in the US is really pushing the China-US relationship to the point of no return. I think in particular worrying that maybe if someone like Biden were to win the election, he will not be as strong on China as you are suggesting. So they want to push the relationship to such a position that even if he were to win, he can't roll back. I don't think he has the idea to roll back, certainly not by what he's saying. Again, am not so acquainted with his political history, which is so long, and to kind of make a judgment on, and certainly in this sort of pre-election times, don't want to necessarily make that judgment. For me, it's just assessing, that the important point is assessing here that this great decoupling will not change. This path, it has started. It is irreversible, whether Trump wins or whether Biden wins. I think depending on who wins, we'll either have global coalition or and maybe less tough on China, and we'll have no global coalition and more tough on China. But even that is not necessarily certain, as I think the big issue of what happens to Taiwan will play in to the second term of whoever wins.
Let's change directions a little bit. As of the close of last week, U.S. equities have climbed for, at that point, the third week in a row, although very, very little last week. The VIX rose significantly. It's unusual for the VIX to rise in tandem with equities, which probably to me and many others simply suggest as we approach the U.S. elections weeks away, there's lots of uncertainty. This is unique times that we're going through with the election, with COVID, with what we just discussed on China. But from your metrics and what you see, what do you think of that? Again, that's rare for that to happen, but we see it happening.
Well, the US equity market has certainly gotten ahead of itself. And actually, interesting enough, less so on the issue of the election, but much more with respect to COVID-19 and the issues of vaccine, is that in particular when it comes to the fraud in the tech sectors, that perversely it will be when a vaccine is put in action and rolled out more generally, that we're likely to actually see the US stock market correct significantly, just as the actual vaccine will be helping real growth and the economy. But there has been this total disconnect between the performance of the real economy and what financial markets are doing, in particular what the US equity market is doing. And so perversely, what would be good for the economy might turn out to take out the fraud of US equities. One other interesting observation, and again, this is not necessarily my current areas of expertise, but I have followed the US for many of my career in great depth. After the global financial crisis, quantitative easing managed to put a floor under broad money growth, but the explosion in equity prices was driven by basically risk aversion going down, liquidity going up. So it was on the demand side, not on the supply side of money. What's different this time around is that US broad money growth has exploded. And so the support to equities has been driven it's driven by both the supply and the demand, not just the demand as it was in the financial crisis. Why this is important is because it does, if it is the supply of money playing a role, then those recoveries tend to have stronger legs. As you just essentially have this excess liquidity in the system, and the only way you can get rid of it is by prices going up. And until they reach that stage where they equilibrate the demand and the supply of money, prices continue to go up. If it's only the demand for money causing, then as investors change their perceptions, and this could explain your VIX example, if you'd like. in the sense that even though uncertainty is going up and the VIX is going up, we're not seeing that reflected in the equity market because a lot of the support is coming from the supply of money, not the demand balances. Does that make sense to you?
Yes, and I would like to potentially dive a little bit deeper into that, but in the essence of time and a series of questions I want to get to, we'll move on. Prime Minister Boris Johnson said on last Friday, that the United Kingdom will be prepared to leave the European Union's single market at year end without a Brexit agreement in place. You're based there in the UK. You're obviously hand on the pulse of what's going on in Europe, the European Union. How do you think that will play out and the impact it will have on the markets and the economy?
Well, I mean, clearly on the economy, the impact will be very negative. I mean, there's no two ways about it. This is a huge upheaval. On top of, if you look at, first of all, the UK's performance during COVID, it has done the worst from the big economies on COVID and on the economy. So it's doing neither right. It's neither sort of getting a handle on COVID at the expense of the economy or supporting the economy at the expense of, I guess, elderly debts. So it's doing badly on both fronts, and it's about to enter into a major upheaval. However, when we look at equity markets and certainly the performance of sterling, the story actually is one where not very far from now, it might be a very good idea to look at UK assets.
Interesting. A little bit out of left field, as we say here in the US, Citigroup notes that Switzerland has met the objective criteria to be labeled as a currency manipulator by the US. I felt that was maybe a little bit strong. As I noted, I've very intrigued by Switzerland from being a family office organization. I have been active looking for my members at setting up satellite offices there, having more diversity and global interest, buying banks. And again, my members kind of know this already. But I look at Switzerland relatively as such a small country, but deemed to be, quote unquote, very, very safe to Swiss franc. From your perspective, again, being literally based in Europe, what do you think of that comment by Citigroup?
I mean, look, you're looking at it, at Switzerland, from a very different perspective. The way you describe this is as a safe haven. And from that perspective, whether they're managing the currency or not, if you'd like, if for investors, currency stability is important, again, irrespective of how that might impact the economy, whether positively or negatively, depending on the circumstances. What I'm trying to say is the two are not mutually exclusive. And what I will bring to the discussion, though, whether Switzerland can end up staying in its neutral position. It was neutrality has been its sort of selling point. But in this interrelated world that we live in, as I described, technology makes it impossible. It really makes it impossible for countries not to decide to choose one or the other. And so here, what would become, I think, critical to watch is what does Switzerland decide? Is it going to be in America's sphere of influence? Is it going to be in China's sphere of influence? And that is very much from a long-term perspective. Otherwise, your views on Switzerland and the fact that Citi sees the currency as manipulated are not mutually exclusive.
I think you hinted at my next question back when you were giving your wonderful open, but I'll ask it. Which global trends will shape the world economy in the coming years? I would have said 10 years, but it seems like COVID is accelerating what was going to happen much quicker. And obviously deep tech and technology, I think, are going to play a large part of that.
Yeah, no, absolutely. And I won't expound on the Great Decoupling, as I did that at the start. And that's certainly, I'd say, the most important. But there are two other that are fundamental, and COVID has accelerated those as well. them is technology in general, per se, on its own. And, it's very, very rare we have these massive inflection points in how a system works. In this case, how the global economic and political system works. And they allow us to make big leaps forward or actually big fallbacks. So hopefully as the world will leap forward and use this to move and make fundamental changes that wouldn't have been possible if there wasn't such a inflection event. But that's an open question. But what's interesting is that it will accelerate, I think, technological development. Sadly, the Great Decoupling will actually slow technological development because, first of all, the global collaboration will have to split. Second, take into consideration the fact that almost half of the revenue from for the big internet companies in the US comes from China. So given that at the moment, a lot of the technological advances are driven by the private sector without the intervention of the government or specific support or policies, all of a sudden losing so much revenue, where are you going to find the money to invest in R&D? I know your views, libertarian views and all of that, but America will be forced to think of how do we compete with a competitor like China, where they're throwing huge amounts of sort of top-down government-directed money at moving forward. And we are not. Do we go to kind of some sort of industrial policy? Do we go to what used to be a very productive relationship between the US military sector and, as you know, the internet was discovered in that sector. That has fallen apart in the last 20 years. In fact, there's a lot of antagonization. No, that's not the word. Help me here. What word am I thinking of? The two sectors are at loggerheads, essentially, and pretty much hate each other. And I think that has to be critical if America is to keep technological progress. But leaving that to the side, there is another very important economic force, and that's inequality. And that will be the other thing shaping how economies deal with the issues of inequality. Because let's say, just take again China and the US. Despite China's massive progress in the last 30, 40 years, they have now become one of the most unequal economies in the world, which doesn't sit well with socialism, was not what they were planning to do dramatically to deal with this issue at a time when overall global income will be shrinking, because again, the decoupling will mean shrinking of global income, will mean much lower global productivity growth, increased costs and all of that. So you have more fights over a shrinking income. The claimants will be, and COVID has accelerated that, will be more and the income will be less. A similar story is going on in the US, which has also become, both in terms of income and wealth, much more unequal, and which is part of kind of the explanation behind the political outcomes of the last however many years. And income inequality, the increase in it also can be traced really as the root cause, this inability of the two systems to be amalgamated in the ways they have. And so again, there you will have, and in particular in the countries with aging populations, a big fight over income. And that would be the other key economic force and political force to watch out for. So the interaction really between those three, the Great Decoupling, income inequality, and how countries around the world deal with this in the context of the bad demographics. Very few countries out there, mostly really African and India, and those guys will have better demographics in 20 years time. Everyone else will have worse, some dramatically worse. And will actually we see a push of technology forward or a pull of technology back because of what I just described?
Yeah, no, those are, certainly wonderful comments. And for sure, we have challenges on some of that here. And those are some things that I would say President Trump has probably not excelled at. But as I go around the world and have relationships around the world, and there are exceptions for sure, I find that most other countries, including China, are actually worse. They're even more behind than we are. At least it's come to the forefront here in the US, and hopefully there's real action, which I think is being done. Very complex issues that you brought up, and I know I need to be mindful of time. Otherwise, there would be further follow-up that I would like to do with that. And yeah, for a developed country, our age demographics do not look bad. But if we really crimp down on immigration, that's going to get worse. We had a guest on a month or two ago that believes in 10 years, there'll be countries fighting and giving tax benefits and benefits for immigrants looking to come here. And that would be another area where I guess I could say that I probably disagree with President Trump on. I think our immigration policy should actually be incredibly open, like it has been in the US for many decades and has been very good for us. That's not to say that there aren't some concerns and things that need to be looked at and maybe things that need to be adapted, but I would be gravely concerned about that potentially moving forward. We probably only have about 3 or 4 minutes left. Why don't we go around a little quickly? We have many families of great wealth that are active investors and global investors. You somewhat covered, and again, very lightly because we just don't have the time, some issues on the public markets. But you did mention as well that you find that families of great wealth are often active as private and direct investors. If you could talk a little bit about some of the things you see from an economic and finance perspective there.
I mean, the world I described, actually, it will be very difficult to make outsized gains in quoted markets. Let's assume that we will have a peaceful bifurcation and not World War III, where, of course, all bets are off. And I know you wanted to ask me about gold as well. I think gold is
that's coming.
Something. Well, okay, I'll leave it to answer that. But in that scenario, where could you make outsized gains? I think private equity will be an area that would offer you, with obviously the right due diligence, because again, you will have the recreation of different businesses in those two spheres of influence. There will be a lot of new stuff happening, a lot of development. If you get the right horse to back, I think that's where you could be making outsized gains. Of course, it can also become a very crowded space. And it might be a space that, depending on the size of the family office, they may not have the capability to sort of analyze it properly and make the right choice. But let's put it this way. 5 years ago, when I left my previous employer, where I had worked for 16 years and sort of started at the bottom and ended up at the top, the reason why I set up Enodo Economics and started developing my own business was partly because of that as well, that this could be the highest, obviously believing in myself, the highest kind of return that I could achieve. But in my case, I know the company inside out. I'm actually affecting the change. But I would strongly argue, not in China, by the way. In China, I wouldn't go into private equity. If I were to play China, I would play the quoted markets and very short-termist kind of way. But in a place like the US, there will be, we just recently did a massive report on reshoring, in particular, which industries are most likely to reshore to the US from China. And some very interesting outcomes were thrown up. And so in all of those industries, we will see the rebuilding, we'll see new players come, we'll see existing players maybe leapfrog. And again, these type of inflection points, as COVID is now one of those, offer the opportunities of outsized gains in that space as well.
For sure. And we're not going to have the time to get into robotics, jobs, universal base income, all intriguing topics that appear to be around the corner. We'll maybe save that for the next time. But if you could maybe pontificate, since we did briefly bring it up, maybe in 1 minute, the opportunity for wealthy families to hedge, I guess you could say, using the ownership of gold, specifically probably physical gold?
Well, I mean, I was telling you ahead of our online conversation that I have a private, a family office client that ahead of the global financial crisis, the financial crisis was coming, and put all their financial assets in gold. I don't advise anyone to do that because that was an extremely bold move, but it paid off handsomely. Realize that gold is ultimately a hedge against uncertainty. I mean, I can talk to you at great length about inflation and whether we're likely to see the return of inflation going forward, but with inflation, we have other hedges. It is actually, though, the fact that I see a world of increased geopolitical uncertainty, one which could be having to deal in the next couple of years with the issue of war between two superpowers. And yes, of course, America is still at the leading edge of various technologies, but the wake-up call for America and American, they didn't expect it necessarily so quickly, is that China is now leading in some of the new technologies. So it's not as America is no longer so clearly ahead. And that's why, of course, it's so much more nervous. But gold, I would consider it seriously on the basis of much more geopolitical uncertainty coming down the pipe, unfortunately. As a mother, I don't want to be forecasting this, but as an analyst, this is what I'm saying.
We could do a whole show about the next topic, but we'll keep it short. Again, I want to be respectful of your time. And to some people, it relates a little bit to the new age gold, and that would be cryptocurrencies. And maybe a little bit of a bigger picture question, as countries from China, the US, and others look at developing their own cryptocurrency, and theoretically what that may do to Bitcoin and others, it seems inevitable that everything that we know on currency, on banking, through blockchain and cryptocurrencies and governments getting involved, it's going to change. No one probably quite knows what it's going to look like, and it may take 10 years. But it looks like there's lots of change on the way.
Well, it is, as you say, a very sort of complex area where we won't necessarily be able to look at it in depth in 2-3 minutes. But what is important to say here is that, I mean, digital currencies, you have to differentiate between digital currencies and blockchain technology. The two don't have to come together. Digital currencies are not something new, if you'd like. Depending on who uses them, they can be a tool for authoritarian control. This is also very important. So somewhere like China, why is it moving ahead so much faster than anyone else with respect to their digital yuan? It is because, number one, their payment system is very clunky, and that gives them an opportunity to authoritarian control. Their capital account is closed, and they can force people to opt into this digital yuan. For a liberal democracy, what are the benefits to having a digital currency separately? Western central bankers are actually quite resistant to moving in that direction. They feel compelled to do so because of the competition of the Libra, or the idea of Bitcoin. So in some ways, they're unwillingly or against their will being kind of pushed to go in that direction. Someone like the People's Bank of China investing so much for their own reasons into digital currencies is kind of putting extra pressure. So it's not only Libra, but it's the Chinese on top to make those guys move forward. But that is not necessary. We have to actually analyze what will a digital currency that is different to what we've got right now, what will be the benefit of it? And in some ways, you could argue that there could be, from a monetary policy view, I guess central banks are also moving in that direction because they certainly do not want to lose whatever control they have. So it's a very complex issue. I think for investors, you should keep an eye on it for sure. It can shake things up, but don't get too overexcited. It is not kind of something entirely new or non-existent, but it is something that, not necessarily for the right set of reasons, is moving ahead and can have a fundamental impact on, one, the economy and growth, and two, financial markets.
Excellent. On that note, we are coming to an end. This has been great. I'd like to hear a little bit about the work that you do with wealthy, successful families around the world and how they could engage with your organization. Again, Enodo Economics, Enodo Economics, and Diana, spelled Diana, and last name Choyleva, which is spelled Choyleva. But Diana, if you could maybe give us just a little bit about the work that you do, whether it's consulting, retainership, however it may work on the global economy and finance issues.
Thank you for the opportunity. By the way, I don't know if it's a blessing or a curse, but my family name is unique. So actually, if you Google Diana Choyleva with CH or Y, there's no one else called that. So it will be me. I guess business-wise, this is a blessing. My Twitter is @Choyleva. Again, very easy to remember. Our website is enodoeconomics.com. Feel free to reach out on through either channel. What we do is really focus on China, actually, on China's economic, political, and geopolitical developments and their impact on the rest of the world. I've been a global economist for 20 years, and I've done that in the past. And when I set up Enodo, for a variety of reasons, I chose to just focus on China, largely because if you get China and the US right in global markets, you get 90% of things right. There is a lot of research out there on the US. There is a lot less quality, proper understanding of China out there. So our focus is China, how it impacts global markets. And you're right, we service clients across the financial landscape, whether it is mutual funds, hedge funds, private equity companies, real estate companies, as well as a lot of family offices. I must say, though, I enjoy actually my work with the family offices the most, because it can throw all sorts of unusual scenarios that are less prevalent in more structured institutional investor spaces, if you see what I mean. We service clients with the view. So the type of research we would do is not China for the sake of China, but what does it mean for markets in particular, both in terms of China's own markets, but more importantly, China impacts everything else that's going on. What does it mean for global asset markets?
Of course, those are very good points. And we didn't even get into, relative to the volume of people in China, even Southeast Asia, not of China, there's billions of people. The markets for some of the technologies and earlier stage companies that we're talking about is tremendous growth, and an opportunity for some of the research, analytics, and thoughts that you do are valuable for people that are both public and private investors. I find that to be very valuable. So yes, they could reach out via the website or through your social media handle. That would be great. And everyone, on that note, I wish we had more time. There's lots of questions on the table, but that will make it exciting to have Diana back again. Everyone, I'm Angelo Robles. I'm the host of the Angelo Robles Podcast and founder and CEO at Family Office Association, a global membership organization dedicated to families of wealth and their single family offices. We do a significant amount of original proprietary content. We host hundreds now during COVID of digital online programs practically daily, a series of masterclasses and other resources for significant investors and families of wealth including how to create and how to reinvent, especially during times of crisis, a family office and having more of a global perspective, which we do recommend even for quote unquote American families. We do some level of consulting, mainly around starting a family office or reinventing during the current times. I'm also active on social media. Lately, the one I probably push the most because our videos is YouTube. Simply, that's Family Office. We're Family Office Association on Instagram. Check out our new website, which has all the details, familyofficeassociation.com. And my direct email is angelo@familyofficeassociation.com. Deanna, thank you so much for your time. I look forward to the next time.
Angelo, thank you very much for your time as well and for giving us this platform to share our views and analysis.
The pleasure
I really enjoyed it.
Thank you. You're very kind. Thank you.